Access Bank, one of Nigeria's leading banking groups, in furtherance of its drive to be a key player in the Nigerian and sub-Saharan African banking sector, engaged market stakeholders at the Nigerian Stock Exchange on its fifth-year transformation strategy. The strategy is anchored on becoming the world's most respected African bank. CEO of the Nigerian Stock Exchange, Mr. Oscar Onyema, in his opening remarks, commended Access Bank for providing the required information on its strategy to the market.
We are pleased that Access Bank PLC has chosen to use the NSE platform to engage the market on its strategy and operational developments. We welcome these regular interactions with the market and encourage you to continue with this commendable trend, which you started over 15 years ago. Access Bank has continued to reposition and redefine its strategic vision and objectives to take advantage of the emerging trends in the financial services landscape in Nigeria and Africa. As you know, on the NSE platform, the market reacts to information as is expected of all efficient markets. The exchange continues to provide a liquid and transparent platform to support listed companies to meet their strategic business objectives in Nigeria and globally. The NSE Banking Index is up about 72% year to date as a result of what banks like Access Bank are doing to drive enterprise value, in addition to macroeconomic factors. This is the best performing sectorial index on the NSE this year. This performance and that of the NSE All Share Index, which is up about 41% year to date, have encouraged listed companies to raise over $1.5 billion in the market through further equity offerings. It has also encouraged 4 new companies to list on the exchange this year. With the fast-changing macroeconomic environment in Nigeria and globally, we encourage Access Bank and other listed companies in the financial services sector to continue to build on their culture of excellence, innovation, leadership, customer service, and professionalism towards attaining a deeper social impact, higher regulatory compliance, and greater returns for shareholders.
Group Managing Director of Access Bank, Mr. Herbert Wigwe, FCA, in his presentation highlighted the major focus of the strategy and the key elements.
As a starting point, we continue to maintain very strong financial indicators. As far as our after-tax profit is concerned, we maintain ratios of about 15.7%. We have a very healthy and robust capital structure. Our non-performing loan ratio is at about 2.5%. Our capital adequacy is at about 20.5%. Given that we're just coming out of a recession, these are very robust numbers. And if you were to look at us and compare us with the rest of the industry, we are definitely top 3 as far as those critical ratios are concerned. In terms of liquidity, which is also important at a time like this, we have a liquidity ratio of about 46%. Now, when you look at this in the context of the markets, we have basically adopted Basel III and asked ourselves the need to create a liquidity buffer given how we see the macroeconomic conditions. At 46%, it is a very healthy liquidity ratio, way above that of most of our competition and way above the minimum threshold that is set up by the central bank. We are traditionally, in the past, a wholesale commercial bank, but one of the things we've done over the past 5 years, for those who were here and when we shared it with the market, we have deepened our retail footprint and retail incursion and increased our overall retail base to support us in terms of liquidity, to support us in terms of transaction income that can derive without taking incremental risk. Retail growth will remain a critical anchor for Access Bank as we move into the next 5 years, as we also continue to expand within and outside our continent. This is our growth story. It's one that we're extremely proud of and has shown over the past 10 years phenomenal growth. You've seen our net revenues grow from 6 billion in 2005 to 273 billion in 2016. That number definitely placed us amongst one of the top 3 banks in the country. We've seen our profit before tax grow from 1 billion in 2005 to 90 billion in 2016. Now, The jury is out. We still have up to the end of the financial year to see where we would fall, whether it's number 3 or number 4. But these numbers are putting us in good standing within the context of the industry. Total asset base at 3.4 trillion, deposit base of 2 trillion, and this was 2016 numbers. NPL ratio and capital adequacy ratio, extremely important for a bank because they basically indicate the capacity of the bank to weather through storms like recessions, etc. We are definitely one of the top 3 banks as far as those ratios are concerned. Let's look at what we're doing. We're looking at the Nigerian market. It remains extremely important. We have looked at other sub-Saharan African countries, and I'm talking about the big players to see if there are opportunities. The biggest player there is South Africa. Studies show that over the next 5 years, the South African market banking industry will be providing revenues of about $26.7 billion. Looking at taking the compounded annual growth rate of 7.4%, Nigeria should be about $16.8 billion, followed closely by Angola. Well, not closely. Angola is about $5.7 billion, and of course, Ghana, 5.5, and then the rest of Africa, 14.8. What does this tell us? Looking at the growth rate in sub-Saharan Africa, given our population and all of that, Nigeria remains a compelling case to continue to pursue and dominate. So Nigeria remains a critical market for us to pursue while we continue to do other things in sub-Saharan Africa. Nigeria remains a critical focus for all of us. So let's look at our 2018 to 2022 aspirations in very clear visual terms. Over the next 5 years, a couple of things would happen. We will be the number 1 bank in Nigeria with a strong global franchise and a universal payment gateway. Now, that will be supported, obviously, by strong corporate governance and a robust capital base. So let's break down the elements. First of all, like I mentioned at the beginning of the presentation, our overall ambition remains to be the world's most respected African bank. That's one. Secondly, we will be number 1 in Nigeria over the next 5 years. Thirdly, we are creating a strong and integrated global franchise outside of Africa. And I'm not talking of just subsidiaries. I'm saying there will be collaborations, but our franchise will be global and the way it is seen and the manner with which we do our business. And finally, we will be the number 1 in trade and intra-African payments through the creation of a universal payments gateway. But there are a couple of things that are important to do all of this. The first is that we must be guided by best practice and the highest professional standards in arranging our institution to be able to achieve this. The second is that we must lead our global integration with technology and strong digital innovation if you want to create a universal payments gateway, which means that settling transactions across the overall continent, irrespective of where it is coming from, you need to create the relevant collaborations to get to where you want to get to. If you want to do retail properly, it's not through physical or relationship management as it used to be in the past. You must have interesting partnerships and collaborations with the various mobile telephone companies, etc., to make sure that you sign on customers in large numbers and close on the transactions you need to close. The third is that governance is important and compliance is extremely critical. We will be scrutinized more than ever before, much more than ever before. The fact that an African bank is handling these transactions will bring a lot of scrutiny. So we will invest a hell of a lot of money on compliance. We will automate the process in the same way that the larger players in the West do, the same way that HSBC or Citibank or Santander does. That is how we will do our compliance, and we will invest in the relevant technology to ensure that we achieve it. The fourth is that we will continue to maintain a very strong capital and liquidity ratio and numbers. So let us break down the elements. It's important that as we go through all of this, we take the elements and we share with you how it's going to be done, so that it's not just we're not just bantering expectations. So you have an idea that is well thought out and all of that. So first of all, even though our history was one of a wholesale commercial bank, retail remains critical to us. So we will continue to expand on our retail business and ensure that we consolidate on our wholesale, the existing wholesale business which we've grown. To achieve this, it needs to be digitally led. And of course, today we do have a digital banking division. It is going to continue to pursue and push this growth, particularly at the retail end, but also support the corporates that are becoming more and more sophisticated in their use of digital and taking their products to the last customer. Customer focus remains important. When you are dealing with 1 million customers, it's easy. 2 million customers, it's a bit more difficult. 10 million customers, it gets more interesting. 30 million customers, as more as we will exceed, all right, it gets even much more interesting. So we need to be a lot more customer focused. We will need to change our org structure to reflect all of that. But more importantly, we will invest in significant data analytics and a lot more on digital as well, and artificial intelligence to ensure that we basically capture customers, bring them into the fold, resolve customer complaints as they come up. When you have complaints or issues with 30 million customers, it's a lot of customers to have issues with. So we will predict customer behavior in the same way the global players actually do to ensure that we run a first-class institution. In conclusion, ladies and gentlemen, for us, we have always met, each time we've made a promise or a commitment to all of you financial analysts, we have consistently met those commitments. This time, we've set for ourselves a huge task, which is to be the #1 bank in Nigeria over the next 5 years. And to do that, we need to execute on the following and achieve them seamlessly. One, our retail offering must be deepened and strengthened, and the use of digital and collaborations and partnerships within the context of Nigeria, and of course to a lesser extent other African countries, is going to be extremely important, because this is required to support retail and of course the payment space. We will use big data and data analytics to drive customer insights and to support huge customer acquisition across the entire continent. We will be the dominant bank as far as Nigerian corporates is concerned. I think our history as a wholesale commercial bank is one that everyone knows, and I think we continue to play a very significant role as far as that sector is concerned. We will dominate that market again over the next 5 years. We will focus on our global collaborations in the key gateway markets to ensure that we provide correspondent banking more and more to Nigeria, but as well as other African countries. And we basically lead as far as intra-African payments is concerned. Now, to support this payments framework, the creation of a universal payments gateway, which will be powered by a strong technology platform, is critical. And that is one of the things that we are in the bid to do. Achieving all of these things will get us to the next destination, which will be Africa's gateway to the world.
Mr. Wigwe speaks further on the key drivers of what will reposition Access Bank as a market leader in the financial services industry, retail and wholesale banking.
I think digital is important. First of all, digital is critical for all sorts of payments, intra-African payments, and the creation of a universal payments gateway, not just within Nigeria, but across the continent, is a key thrust. And so we need to ensure that digital works, and for us to also harvest the number of customers we are looking for over the next 5 years. I think the second is the building strong collaborations and partnerships within and outside the continent is important. We need to strengthen our relationships with the global gateway markets, as we call them, whether it's in Asia or it's in the US or it's in China or Hong Kong. So we're building all of that to ensure that correspondent banking, all right, and payments that are coming into Africa happen seamlessly through the group. Those are the big issues. The third has to do with our clients, our existing organization structure and our service model, which we need to alter a little bit by pushing retail more and more and getting into the mass market. You need a different organization structure required to support it. So we're making all of those changes that are required. However, we're not losing sight of the traditional areas like our corporate banking business, where we're strengthening our customer service team, all right, required to ensure that we achieve dominance in those markets.
Access Bank has set for itself an audacious goal of becoming the #1 bank in Nigeria in all ratios and parameters by 2022. This will be anchored on people, technology, and compliance with corporate governance principles. Analysts, market players, and the investment public will watch closely to see how the bank intends to drive this strategy to realization.